Jerome Powell to speak today. What does that mean for the markets? That's coming up on Before the Bell. This afternoon, Jerome Powell will give his latest speech. Of course, this is what the bulls are all looking at. Will there be a hint of softening of his stance regarding interest rate hikes, inflation, those type of things? The answer is probably no. What Jerome Powell has been famous for over the last several months has been trying to smack down the bulls a bit to get them in line with what the reality is. The Fed is going to be focused on fighting inflation and reducing liquidity until there is a clear trajectory of inflation back towards that 2% target. We're not there just yet. The Fed's biggest concern, of course, is a repeat of the 70s, where you had inflation coming down and then it re-accelerated and went to a higher level before it finally broke under higher interest rates under Volcker. That's going to be the real question today, paying attention to. Of course, markets yesterday rallied above the 50-day moving average, failed at that level, came back down, closed below it. So we'll see what happens today. This morning, futures are pointing lower in anticipation of Jerome Powell's speech. So this afternoon could be anywhere for the markets depending on what Jerome Powell says. But here's the bullish side of the arguments. We do have a MACD buy signal in place that is helping support this turn up in the market here over the last few days. Markets did get overbought here on a real short-term basis as well. So again, a little bit of a correction won't be surprising here. But again, this MACD buy signal is intact. Money flow buy signal is also intact as well. But we are generating that signal at about a midpoint of the normal correction. So again, might have a rally up to around 4,000, 4,100 potentially. That's where we're going to start intersecting the top of the Bollinger Band as well as that downtrend line from January highs of last year and the 200-day moving average. We'll see how the markets deal with that. But there is a bit of room here for the markets to rally. A couple of other areas to keep a watch on right now are emerging markets and international. Emerging markets also on a buy signal, but at a very high level. That turned up. Again, emerging markets doing a little bit better this year than the markets themselves, the domestic markets. But be careful here. Emerging markets getting pretty well ahead of themselves on a short-term basis, very overbought. And again, when the economy in the U.S. becomes under recessionary pressure later this year, we tend to get a cold. They tend to get the flu because they're export-based economies. So emerging markets international have underperformed domestic stocks for a long time now. They are outperforming here short-term from a trading perspective. That's fine, but be careful here. Moving into a recession, emerging markets will tend to underperform because of the impact of the domestic drop in demand on economies that are dependent on exporting out their goods and services. Small cap and mid cap stocks also performing better here. Again, challenging the 50-day moving average just like the S&P on a buy signal, overbought short term. Again, what we're going to get into later this year is questions about earnings and the growth of the economy as the recessionary impact occurs because of the extraction of liquidity, failure of physical stimulus coming, etc. That is going to start impacting earnings growth because of slower economic growth. Big companies, large cap companies tend to fare better. Your value-based large companies tend to do well in that type of environment. Small to mid-cap companies tend to do worse because of they have smaller impacts and footprints in the economy. So a slower economy really impacts their earnings much more quickly. So be selective where you're investing capital for the course of this year until we start to get through this process where the Fed is actually getting back to cutting rates and redoing QE, and then the game will change. But until then, there's going to be some pressure on stock prices. I'm your host, Lance Roberts, and that's what you need to know before the bell.